Thank you for joining our first Fireside Chat of 2021. My objective today is to tell you about how our strategy for 2021 is evolving and set the tone for the year. I have some remarks to make, and then we will be happy to answer questions. With me on the call today are Leon Deng, our new CFO who joined October 1st, and Mike Young, our COO, who is based in the US. Let's get started. As you probably know, we have a significant position in the global smart health device market. Number 2 in the world by IDC's shipment data, driven by a number of unique strengths. But Huami is still a bit unknown to the broader investment community. With these fireside checks, I want to communicate more proactively and clarify our position and strategy so that investors can make more informed evaluations of our potential. I want to focus today on how our strategy is evolving this year and 3 key drivers of our business: consumer health tech, data analytics, and our newest industrial health strategy. CES, the Consumer Electronics Show, just finished last week. Although it was a virtual this year, we felt it was a good show for us. We were able to highlight all of the large number of new products we have at present and provide some hints at what may come the rest of this year. I was especially pleased to see that several of our newest products made Best in Show lists from a number of industrial watches, including wearable, tech radar, digital trends, and gadgets and wearables. Even before CES, CNET awarded the new BIP S its editor's choice. The BIP series represents market-leading functionality at a value price point, and our GT series represents excellent functionality at the premium end of the market. We are very proud to have both of these products recognized. I think that recognition is a direct result of one of Huami's key business strengths, our pace of innovation. We introduce new products and new models of products, I think, faster than anyone else in the wearable space. Last calendar year, we launched 20 new product models, keeping the product offering fresh and updating with market-leading features. Technology and prices has been the key to our success. For example, we shipped 3 different versions of the BIP product last year, each with increasing functionality and upgrades. A key part of our 2021 strategy will be to continue our rapid pace of innovation, although not at last year's record pace. You should expect us to continue to push better wearable technology to low price points and to add new innovations with new functionalities and features to the top of the Zap and Amazfit lines. In 2020, we also expanded beyond just smart watches into earbuds, scales, and even home fitness equipment, such as our first treadmill and mirror. New models of these new lines were showcased at CES. For obvious competitive reasons, I'm not going to pre-announce anything, but you should expect to see Huami continue to expand our range of products in 2021. This is part of expanding our smart health and wellness ecosystem. Another key strength is that we design and build our own AI smart chip for our devices, as well as our own sensor array and related algorithms. This gives us not only a cost advantage, it gives us a time-to-market speed with new functionality. We can design functionality ahead in our chips and sensors, which gives us greater speed to market with new tools for consumers and health sponsors. This year, the new Huangshan 2 AI chip that we developed will start appearing in new devices. The new chip will give our products greater speed, intelligence, functionality, and battery life. Shifting to the data analytics side of our business, you have seen recent news from us highlighting some good progress in 2020 for Pi Health and our data analytics strategy. In mid-December, US-based insurance company January announced the results of a study using Pi Health analytics for insurance underwriting decisions. Their report concluded that Pi Health analytics provided additional value beyond traditional tools for underwriting. This gives our marketing efforts for Pi Health a significant boost going into 2021. Insurance companies move at a careful pace, but 2020 represented a challenging year for insurers. Changing and distracting from normal business investments and strategies. We are expecting a better climate in 2021 for insurer discussions, and I am expecting more progress in putting our data analytics to work with industry to leverage data from our more than 30 million active users. Adding to this, Huami was recently granted license to sell insurance in China, which we believe could open up some new partnership revenue opportunities with insurers in China. Notes also that data analytics is a key part of expanding our smart health ecosystem. Being able to tie insurers, care and wellness providers, employers, individuals and families together to improve health remains one of our main goals. We will be working to add services and linkages to further expand our ecosystem in 2021. The third key thing I want to highlight today is our new industrial healthcare strategy. While the consumer health technology business will continue to be a profitable backbone for Huami, we are setting out to build another growth pillar for the business, which will have different and less seasonality than the consumer side. Huami's mission is to connect health with technology, which leaves us wide latitude for how to deliver on that mission. Our company's engineering has focused on miniaturization and health data analytics. I believe the medical imaging space is a place where our expertise can be further applied. Equally important, this is an area of healthcare that is due for some disruption. For example, in the U.S., the healthcare system's payment structure has created significant overuse of imaging, driving up healthcare costs. In other markets, the cost of large, expensive imaging systems has prevented wider applications for patients and clinicians. A number of new technology in X-ray, MRI, and ultrasound show promise to change the locations, applications, and costs of medical imaging globally. In recent months, you have seen announcements about Huami partnering with Aspen State Imaging, which is pioneering portable X-ray systems. Last week, you saw that we led Prometio latest investment round along with a commercial partnership agreement. Prometio is pioneering low-field change MRI technology for the doctor's office, with an initial focus on urology. We expect to develop a portfolio approach with multiple technologies, applications, and partners. There are many ways Huami can enhance its revenue through these partnerships. In the near term, we can generate new revenues by helping sell these products in China and other global markets. As part of this, we expect to help these partners receive approval from the National Medical Products Administration, China's FDA. Through engineering partnership, our AI and algorithm intellectual property may add supplemental revenue opportunities to current or future products of either company. We will explore ways to tie imaging devices into our health ecosystem, which could help generate services or data analytics revenues. We will explore ways to tie imaging or related patients' pre- or post-treatment activity or monitoring to our smart consumer devices, which could generate revenue. And as part owners of some of these companies, we stand to benefit from future value creation events. This is a long-term developing area for Huami, but we are excited about the opportunities it presents for supplemental revenue growth, expanding our ecosystem into the industrial side of healthcare, and developing our brand in the healthcare industry. I hope this has been a good overview for you of how our strategies for growth in our three main areas are evolving for 2021. I promise we have some good surprises to come on the consumer side as we continue to drive innovation. I'm hopeful that insurers will get back to more normal business operations this year that can move dialogue forward on our data analytics business. And we are very enthusiastic about the new opportunities to participate in disrupting medical imaging processes and costs. We are going to open the lines up now for questions.
Yes, thank you. We will now begin the Q&A session. To ask a question, please press star, then 1 on your touch-tone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star, then 2. With these instructions in mind, please hold while we assemble the roster. All right, and the first question comes from Clive Chung with Credit Suisse.
Hi, thank you, management. This is Clive from Credit Suisse. My first question, I think, goes to the industrial strategy side. My question is, how active Huami will be in these investment or portfolio companies you have mentioned, or in the future? Will they be able to use, I guess, the proprietary algorithm or technology, or perhaps even the Huangshan chip? And that is my first question.
Yes, hi, this is Mike Yang. Let me try to answer that question. Yes, we will be working very closely together, not only on the sales side, but also on the joint engineering. And that includes the applications of our artificial intelligence, as well as our potentially, as well as our, chipsets and sensors, if those are appropriate. So yes, so we'll be working together on sales as well as engineering, as well as manufacturing together.
Okay, thank you. And I think if you could share also, I guess, some directional, guidance or expectation by the company, which other areas in this industrial healthcare are you guys planning to look at? Obviously, medical imaging is one. What kind of the broader picture and what kind of areas we could look at? Thank you.
Yeah, so right now we're just started with this new strategy. So for now we're focusing on medical imaging, but definitely we will expand into other areas. But for now, in the short term, we will try to expand more into medical imaging areas first.
Okay, thank you. And I guess my last question relates to, I guess, the monetization of your chip, Huangshan. I guess part of it will be self-utilized into your own products. Are there other monetization plans for your own chipset? Is it going to be sold to third parties or other wearable companies? And do you see, I guess, competition because of that, or what is the view of the company in terms of the overall strategy for your own chip? Thank you.
Yes, we do have plans to also sell our chips and sensors to other IoT companies. Obviously, they cannot be our competitors, but yes, I mean these are chips that are general purpose enough that we believe that many IoT companies can also use these processors and sensors.
Okay. Thank you very much, Mike.
Yeah. Thank you.
Thank you. And the next question comes from Michelle Chang with Kennett Renaissance.
Hi, thank you for taking my question. So my first question is about this industrial healthcare business. So what is your long-term, the revenue contribution target from this business?
Maybe I can comment on that. At this moment, we are still in the investing phase on the industrial health strategy. But obviously, as Huang just mentioned, we want this business to become a growth pillar of Huami So in the future, we see a good potential of this business also forming a significant part of our business. But at this moment, the contribution of this business will be relatively small.
Okay, thank you. And my second question is about your Amazfit products, like your plan for the offline distribution channel of Amazfit products this year.
Can you repeat your question, because I didn't quite get it?
Yeah, sure. So my second question is about your offline distribution channel plan for the Amazfit products.
Oh, okay. Yeah. So as you can see in 2020, in the financials, we have already spent a significant amount of the marketing and sales money into expanding the offline channels of Amazfit products for this year, right? So that's also one of the reasons, if you look at the OPEX spending for 2020 versus 2019, you see a significant increase over there. And we have actually strengthened our offline distribution channels both in China and overseas for Amazfit products this year quite significantly. But having said that, we also face certain setbacks because of the COVID virus impact. And if you look at Europe and the US, these markets, the offline channel is pretty much closed, right? Because all those countries are back into lockdown. So that's the reason we will continue to push for the offline channel expansion into these markets for next year, for 2021, and this should be, when the virus is over, this should be also contribute to our top line growth in these markets.
Okay, thank you.
Thank you. And once again, please press star, then 1 if you would like to ask a question. And the next question comes from Jimmy Yang with Congest.
Hi, management. Thanks for taking my question. This is very insightful sharing. My first question is regarding your medical imaging business. So can you give me a little bit more introduction on who are your clients, who are going to sell this product to in mainland China, and maybe give us a little bit more color in understanding the total addressable market in this business, how big it could be in China. Thanks.
So this market is quite big, actually, not in China, but globally. With these partnerships, yes, we can help our partners to expand the market share in China. But I want to reiterate, it's not just China market that we're working together. We are actually in a global partnership with these companies. But as far as potential enterprise customers, there could be hospitals, clinics, because due to the pandemic, all the countries, including China, it's very focusing on building up their health infrastructure, which is everybody a lot more aware of that. And just for example, in China, a lot of currently still a lot of people still rush to the cities to the hospitals because there's not enough good clinics spread it in the rural area, for example, and that creates a lot of congestion and overcrowding, and so the government have the intention to try to build up the infrastructure, spread it across all regions, building up more clinics, so that to reduce these overcrowding in the cities' hospitals. So this is an example where we could potentially sell into these new clinics that's being created across the country, and also because of the cost reduction, and also the potential miniaturization of these devices. They could also be used in the new scenarios, and not just inside the clinic and hospitals, but potentially, for example, portable, for portable X-ray. It could be used in emergency scenes, or accidents, or accidents scenes at an accident area, for example. So there could be new scenarios where these devices, due to the miniaturization of these devices, can be used. As far as the total amount of dollar in revenue, not in market potential size, we believe it's in the we don't have the exact number, but it should be in the billions of dollars in terms of total market size. Did that answer your question?
Thanks. Thank you very much. Just one more thing to add here. So you are saying that you want help the Pro Maxo to apply for the CFDA, right? Chinese FDA. How long do you think that would take?
I think it also usually from our experience, first of all, these companies like Maxo, these companies you're working with, they either already have the U.S. FDA approval or they are already in the process of applying for it. So that helps a lot. For example, Aspen Medical Imaging, one of the partners we work with, they already have a U.S. FDA approval. So with that, the process would take, we expect should be faster. Maxo is in the process of getting U.S. FDA approval. They don't have it yet, but very soon. But if based on our experience, again, if they already have FDA approval, these kind of things, probably again, it depends on the device. It could, and case by case, maybe 12 to 18 months. It could be faster depending on the the device. Yeah.
Thank you, Mike. My second question is actually regarding all of your so-called non-consumer electronics business. It's very encouraging to see Huami expanding to a lot of areas, but when do you think we can see kind of meaningful revenue contribution from your non-consumer electronic business, for example, the insurance business, the medical imaging business into our P&L? Thank you.
I think you should be able to see some of that starting to kick in second half of 2021.
Okay, thank you very much. And my last question is regarding your traditional cash cow consumer electronic business. So we know that 2020 is kind of a tough year for us. The COVID stopped a lot of things, and our margin seems to be eroded a little bit compared with 1 year before. So in 2021, if things are going well, what kind of recovery, especially in the margin side, could we expect?
I think it's still, and we don't want to give an official forward-looking target for the year. We actually never does that. But I can give you a few indications on where we're heading to. So obviously, the overall wearable market is still in the growth, right? So I think we should definitely grow more than the market. So both for our that applies to our watch and band business, right? And if you look at the margin, obviously in the past we have a significant of the revenue which is consists of the Xiaomi band, and then our own branded products actually it's the other part of that business. In the past, it has always been around 70% Xiaomi and 30% own branded business. We think in 2021, this paradigm is going to more shift towards more own branded products rather than Xiaomi branded products. And then our own branded products obviously carries a higher gross margin. So from that perspective, we're expecting the 2021 gross margin to expand versus the 2020 number. But again, there's uncertainties around COVID, and then we saw more and more places back into lockdown, and in United Kingdom, they're talking about locking down until summer. So what I just mentioned is very much dependent on if we can get the vaccine and then the business can be restored to a normal course of business by the second half of 2021. So if for whatever reason, the COVID situation, because most of our key markets are outside China, right? So that is actually one of the uncertainties and caveat to the statement which I just gave.
Thank you very much, Leah. That's very helpful.
Thank you. And the next question comes from Marcel Lunch with Domji.
Yeah, hi. Thanks a lot for taking my call. I'm a private retail investor in Huami, and I also cover and analyze Chinese stocks, including yours, on a YouTube channel. So I'm really glad that Huami is open to the voice of retail investors here and communicating openly here with this Fireside chat. So thank you for that. It's really interesting to learn about the 3 key drivers for 2021. And I've got 3 questions along to that. And my first one is actually to the new CFO, Leon Deng. With those new 3 drivers outlined, are you looking to make some changes to the way you are reporting the business, for instance, in the earnings calls and so on, more reflecting those data or numbers, for instance, about we hear today about the numbers of users and data collected and so on, in regards to those new 3 drivers. And so, what are KPIs that you are thinking about and targets aligned with that? Can we expect that you are talking more about these points going forward?
I think answer is yes. For example, we're definitely thinking about giving more transparencies on the breakdown of different products in our annual report. But you know that we do have certain SEC and accounting requirements on how you want to disclose certain business units' performance. So we also need to be in compliance with that. So yes, within the areas that which is in our control, and we will for sure in the coming quarters to give you more color on those growth drivers which we just mentioned.
Okay, excellent. That's good to know. And the question related to that, actually, where does the recent deal or partnering with Yitong High-Tech Technologies actually fit in those 3 drivers that you just outlined?
I think it actually fits on everything which we just mentioned, but since the transaction of Yitong is still being approved by the Chinese regulator, or in the process of that, so we don't want to say too much beyond that at this point of time. Our long-term strategy is to better serve the Chinese market, and also we believe that Yitong and our acquisition of a minority stake in Yitong will for sure yield a future value on that.
Okay, thank you. And my last question and related to that is actually about Huami's internal capabilities to execute on some of those plans that you've outlined. So, for instance, we heard today about that Huami has now the license for insurance business in China, which I think is massive. But my question is, could you give more flavor on how good are actually the internal capabilities of Huami, for instance, when it comes to data analysis or also software, and to make sense of this opportunity in the insurance area? Or is Huami more going in this partnership mode? So how much is inside Huami and how much is going through the partnerships? Thank you.
I think Huami has been very strong on the software and data analytics side. because we are actually the number one in the wearables domain, and the wearables is not talking about a hardware, it's talking about hardware and software, app, algorithm altogether, right? And because of that, we actually entered into all those domains, for example, on InsurTech and on the hardcore healthcare industrial health part, right? And if you think about it, everything is building on our core technology and our core competence, on the algorithms, on the software, on the supply chain capabilities we currently have, right? So I guess that is actually for sure the first thing we want to leverage our core capabilities in all the things which we're going to do. And if you look at, for example, on the insurance company or on the partnerships which we're going to do, one of the key building block is when we tap into the insurance company or when we get the insurance license, we always have a partnership, or we always hire internal people from the insurance industry, for example, in our company. So take, for example, Pi Health, which is one of the acquisition which we did in Canada. So we not only acquire the algorithm, the software capabilities, we also acquire knowledges and people who are very good in knowing this industry, right? And the same goes for the healthcare industry as well. When we partner with those partnerships, obviously it's with the intention that in the future we'll also hire people internally or building on the competence these people and the team is currently having to actually and adding on the Huami's core capabilities and make those smaller startup alike type of company bigger. I hope that answers your question.
Yeah, very insightful. Thank you. Thanks a lot.
Thank you. As there are no further questions now, I would like to turn the call back over to Grace Zhang for any closing remarks.
Thank you once again for joining us today. If you have further questions, please feel free to contact Huami's Investor Relations Department. This concludes this conference call. You may now disconnect your line. Thank you.